Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. In this presentation, we are going to look at the S&P 500 over the last 30 years, see what kind of returns it has produced and how many times it tanked and what are the lessons we can learn from that going forward. Okay, let us begin with, and here is a little table which I'm going to just walk you through quickly. Then we're going to come back to this at a later time. From 1994 to 2020 here, but 2022, 21 we already have. In 2021 it was 321. Today S&P is 422, almost 30% higher than what it was in 2020. But if you look at here, the red numbers, they have been like 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 red numbers. That means the market was down, but for majority, more than 2/3 of the time, the S&P 500 has been on an uptick. So let us keep that in mind. On an average, S&P has generated 10 to 14% over a period of 20 years. Of course, this is 2000 is the dot-com bust, and this is the 2008 market crash from the financial debacle that we saw. But from 2008 onwards, let's take a look at this here. From 2008 onwards, the market has had the biggest bull market response in the history of the stock market. The stock market was pretty flat here before 1994 for almost 10 years. Then it took off around 95 at a dollar value of $40, and then it reached the peak around 2000. That was just before the dot-com bust. So in that period, the market went from $40 to $160. That is a 400% rise in the market value. Then it dropped all the way down to $80. That means it lost almost 50% of the gain it had made, and that wave continued from 2000 to 2003. And along here is the stochastic, which is showing a similar dip here, which may be useful in the future as what they anticipate when we look at the stock market. And this stock market is a 30-year period with a quarterly data plotted here. Each box or each candlestick represents 3 months or 1 quarter. Okay, then from 2003 up to 2008, just before the market crash, the stock market went from $80 to again $160. It pretty much regained what it had lost, but nonetheless between 2000 and 2008 you were practically flat. So from here, the dot-com bust brought this one down to like less than like $70, which was much less than what it was in 2003. But after 2008, the stock market has been practically on a steep incline, like it is trying to reach the Mount Everest. Has it already reached the Mount Everest? And what's going to happen after that? That's an important lesson that we need to wait and see. And especially if you see in the last 1, 2, 3, 4, 5 quarters, that is 15 months, the stock market had the biggest rise in price compared to all the previous 15-month periods in the entire stock market history. So when you are seeing such biggest spike, the next thing is what could possibly happen. And if the market were to turn down, how much would you expect it to come down? If it came down 50% here, and if it came down more than 50% here, are we looking at something like that when it comes down? We don't know. That's something we have to keep in mind. But what can we learn from this particular chart? And as you can see, the stochastic is at 97 points here, and the stochastic is here is 98.7. So when the stochastic is at 98.7, and there is a tendency for it to look downwards or move downwards. Same thing happened here when it was 96. It took a dip here, which was related to the corona crash, as I call it. So these are some of the things we need to keep in mind. Right now, the stochastic, slow stochastic, is at Mount Everest. And from here, where it can go flat for some time, and then eventually we have to see, is that going to take a downturn? Since there is some track history that when it comes downturn, it's not going to be just lasting for a few weeks or months. It may last for a considerable amount of time. And when it reaches the bottom here, like 0 or 9 or 10, then that may be a good place to look for an upward trend. I am not an expert in finances or anything else. I am just an individual investor like everybody else, trying to understand some technical elements of stock market and historic data as we have seen here, and trying to make an intelligent judgment as how do I make money in the stock market, and more importantly, how can I protect the profits that I have made. And coming back to the profits, most smart money managers may cover their stock positions with like covered calls or puts, but this is a point where I think things need to be watched closely to see if there's going to be a change in the direction. Thank you so much for watching this presentation, and please do subscribe to our channel. We have numerous videos on stocks and bonds, and we will see you next time. Thank you so much.